Look, stop what you're doing because if you're thinking about buying a home or investing in real estate, this one mistake could cost you hundreds of thousands of dollars. 1 year ago, you could buy a $400,000 house for the same monthly price or payment that you get a $300,000 house for today. That's a $100,000 lost in buying power. Gone. Now, guess what? The market doesn't care if you're ready or not. But here's the one thing, if you know how to play this right, you could actually use these high interest rates to make more money. This is what the top investors are doing. And in the next 5 minutes, I'm going to break it down. No fluff, no BS, and let's just get into it. All right, so let's get it straight into the numbers because the numbers do not lie. Say you're buying a $300,000 house with a 20% down payment. At a 3% interest rate, your mortgage payment is around $1,000 a month, give or take a little bit. Now, if your rates shoot up to 7%, that exact same house is going to cost you around $1,600 a month. That is a $600 difference. Now, over 30 years, that exact same money, or that exact difference, is going to cost you about $200,000 to $250,000 more for the exact same damn house. So what happens next? People start backing out. Demand drops, sellers get nervous, and the market starts to shift. Now, a lot of people think, oh, the rates are up, so home prices are going to crash. But here's the truth. That's not how it works. Yeah, there are going to be some overpriced homes that are getting slashed, but the homeowners aren't panicking like they did in 2008. Now, why is this? Because they locked in the low interest rates years ago, and they're sitting on cheap debt, and they're not about to give that up. So instead of a full market crash, we're seeing something worse. Affordability destruction. Home prices are staying high, but your buying power is starting to shrink. And that's why if you're waiting for home prices to drop back down to where they were in 2020, you're going to be waiting forever. But that doesn't mean you cannot win in this market. Now, here is exactly what the smart investors are doing while everyone else is starting to panic. Number one, they are buying deals at discount. High rates mean less competition, so they negotiate much harder. Sellers who need to sell, they're going to take a lot lower offers. Number two, they're locking in seller financing. If a seller already has a low mortgage rate, investors are willing to structure creative deals to take over that rate instead of getting stuck with 7 or 8% loans. Number three, they're focusing on cash flow, not speculation. They're not betting on prices going up. They're buying rental properties where the numbers make sense today, even at higher rates. And the biggest move, they're preparing to refinance when rates drop. Because when the Fed pivots, these same properties will be worth more and they'll already own them. So the big question, where are rates going next? Well, here's the deal. If inflation stays high, the Fed keeps the rates high. If the economy slows down, they might cut the rates. But don't wait around hoping for the perfect moment, because the second the rates drop, buyers will rush back in and prices will skyrocket again. So instead of waiting, position yourself now. Lock in a great deal, buy smart, and be ready to refinance when the time is right. That's how you win this game. Now, if you've made it this far, I believe you're serious about real estate investing. So here's your next move. Hit the subscribe button because I'm going to break down real estate strategies for winning in this market. No fluff, no BS, just what actually works. And if you want a step-by-step guide on how to purchase real estate in any market, head over to www.thebouncemethod.com, and that's where I help teach investors how to find real deals, structure them right, and scale their portfolio.